these factor bots that look at a number of different metrics across every sector and say, where is investor money flowing? And then we look at it from more of a, for lack of a better word, discretionary macro standpoint, top-down, analysis, and say, how sustainable is that? Is that, what we think could happen? And where we think, where we see money flowing that we think may not be sustainable, or we may have the other side, that's something that goes on the watch list for us to say, okay, this is what we'll need to see that shift, and that's, where we want to be. So it kind of starts, kind of goes back to the kind of core approach for us is, it's a fundamental, it's a supply demand, and then it's a catalyst. So the fundamental is what do we think is going to happen. The supply demand is what is actually occurring in the market, and then the catalyst is what's going to make that change to come around to our opinion. So when we look at in the models that we've built and what we see kind of going on in the market, we tend to be more upbeat on growth, more upbeat on inflation. For us, it feels like we're kind of in that expansion, maybe more on late cycle, but in its expansion. Part of the economic cycle in the U.S., a little bit expansion, but earlier phase in Asia, not just China, but in Asia, and this is generally a pretty positive backdrop. Conversely, if you look at what the market's pricing in, primarily in the U.S., would be more what looks like stagflationary, if not recessionary outcomes. And so, from a 30,000-foot asset allocator, the positions you want to have when you're in late cycle expansion versus the positions you want to have when you're in stagflation or recession are almost polar opposite. It's cyclicals here, it's defensives here, it's equities here, it's cash here. And from an option standpoint, it's short vol here, it's long dispersion here. So there's a that inflection point and how that plays out is going to be, in my mind, what's going to kind of define this year. It's going to define this year for not just for us, but for everyone. But that's where there's a difference of opinion. But to me, then that says, if we look at the allocation differences between being late cycle versus being stagflation, they're completely polar opposite. And so for us, that means that's where potentially the huge opportunity is. But for I also feel that because we're at that sort of inflection point, it's not the point, or not the time to be dogmatic. It's time to be pragmatic. So there's enough reward that can come to you that it's worth it to be patient and wait till you see some confirming evidence to get on board. Because if we start to see the confirming evidence that we're right, we'll still be well ahead of the people that are fighting the other battle. And so again, we only want to be one step ahead of the crowd. That's really all you can afford to be in the markets these days.